Hello, Paul here. Today I'm going to be giving you guys a strategy for the stock market, and this was actually it's one of the first strategies I learned when I first came to trading. This version has a little bit of there's a bit of a tweak to it than the original version. If you go back on my channel, you'll find that it's probably one of the first strategies that I learned about, especially when I came into trading stocks. It's one of the first strategies that I learned. It's very popular. This one is 1348 with a couple extra added indicators that kind of help find better results. So I'm going to show you how to do this for the stock market, how to plug in this formula. There's a couple moving averages, and we'll plug it in with the regularized moving average, and it actually works really well. So I'm going to show you how to set it up, and I'll show you the time frames that I prefer, and then we'll look at SPY, maybe we'll look at some other stocks, and we'll see how well this actually points out the good moments to get in for your trades. Okay, so first we're going to do this on the hour, and then we'll look at the 15-minute. Those seem to be the best two time frames for the strategy, at least in my opinion. Now, to set this up, you're going to need a few steps. First, you want to go to 3 smooth moving averages, and what you want to input, or you want to make sure you got your bright colors right there, some colors that stand out. You want to go to 13 to 48 on the bottom, but then you want to have 24 in the middle. 24 is actually it's actually there to help you find out good points of exiting your trade. So the 24 is actually there to help you find, when you find your trade, it's actually there to help you find the good moment to actually exit your trade. That's what the 24 is for. But it also will help you find moments to actually enter as well. So you got the 13, the 24, and the 48, and make sure they're bright colors. The next thing we want here is I have my CM EMA trend bars. So you want to go to CM EMA trend bars, and what I do is I put in the 200 moving average, which it's color coded, so you'll be able to tell what direction it's going overall by just looking at the 200 moving average. So you got all 4 of those moving averages, and then you want to put in your regularized moving average, and once you put that there, you put no changes. And that's basically how you set up this formula. So what we're going to be doing is we're going to be looking at times to get in for trade. This is really simple. You use your 200 moving average to find what the overall direction is, and you base everything off of that direction. So since the 200 moving average right now with SPY is up, we want to focus on all the moments where the 13 and the 48 are crossing up. Now, you can also use the 13 and the 24 to find moments to get in as well. If you miss the 1348, you can look for 13 and the 24 here to find other moments to get in. So let's just go back here on the hour and see how this. Now, if you do this on the hour, you're most likely going to be holding your trade for longer than a day. So just keep that in mind. You might find one that's for one day, but most likely if you do it on the hour, you have to hold your trades for longer. Just keep that in mind. So first, let's see the moment where it crossed with the direction of the 200 moving average. We see that happening right here. So right here at this moment, we see the 200 moving average is turning green, and we see all 3 of these lines are crossing. So you would enter here, and you basically write it out. Now you can write it out to as long as the 13 and the 20. What was that? The 13? Which one? It's the 24. The 13 and the 24. So you can write it out as long as it doesn't touch the 24, or you can get it out a lot sooner if you want. So you can write it out from here all the way up to where it crosses, which is right about here, and you'd be profit. This is a $20 difference, but it's 27 days. So you basically, if you want to make it shorter, just do a shorter time, get out earlier. This is 4 days, and you made about over $1,000 for that trade. So let's go back here and find another signal on the hour. and we'll see some trades to get in. Now right here, we see that the 200 moving average is in the bullish, but it's not crossing with the 1348, but it is crossing with the 1324. So you could actually get in right here because it signals a time to get in. And you can basically ride this till it crosses again, which is up here. This is 20 days worth, and it's about a $20 difference price. Most people will probably want it shorter, so here's 1 day right here, and you got $11 difference in price, and that's a little over $1,000 profit. So let's look one more on the hour, and then we'll go to the smaller time frames. Now right here we see the 13 and the 24 crossing right here. And this would be a good moment to get in. You can ride this out till about touches. And this one, let's move right here, is 3 days, almost 4 days. And it's about a $647 move. So anyway, you could use this method for longer time frames. If you do it on the hour, you're going to probably be holding your trade for a lot longer. If you want to do it more on a daily basis, you can do it on the 15 or the 5. And find similar results where you can get in and out of trades. So basically, you use the 13 and the 24 to find good moment. You know, if you're kind of late on the 1348, you can use your 13 and your 24 to find other moments within the 1348 to get in and out of trades. The 24 is meant for finding moments to actually exit your trade before it crosses to the 48. Now, you could use the regularized moving average to kind of see if you're still in that same direction, if it's still going in that same direction. So you want to make sure that your regularized moving average is still, it's going in that same direction as the 1348. So using all that together, this strategy will work on long time frames, and it'll work on short time frames, intraday level kind of stuff. But anyway, this works really well for stocks. It gets pretty good results. Other than that, I'm going to go over the strategy again for some of the other assets out there. You could use this, you know, like I said, you could use it for the hour, or you can use it for the 15-minute. It gives the same results. The smaller you go in time frames, the less you're going to potentially make. The longer you go in time frames, the more you could potentially make. But you would have to extend your contracts. So anyway, if you guys like this video, make sure you hit the like button, hit the subscribe button, and I'll see you guys in future videos.